The warning to Coinbase, though, is that it's breaking securities law, and that may signal the long-awaited attack on crypto's foundations, but also may set up a court fight that finally answers some questions. I mean, long story short here, which you guys can check out the article down below, is that we have, like I stated in the beginning, we have a situation where the SEC is saying, hey, you're breaking securities law. And then Coinbase is like, hey, which ones are securities? And the SEC is saying, you tell us, and then we'll get you in trouble afterwards. And it's one of those things. It's a great negotiating tactic, right? Like, if you're in a negotiation for a contract for money, right? You'll say, hey, I'll do that work for you. And then they say, like, how much for it? Well, if you're the first one to give the price, then that gives that person a negotiating tactic, right? So if you tell them, well, how much do you want to pay? It may be the case where they way overshoot that price, right? And then you're like, okay, great. And then as the seller, you can just make a great deal. They're happy because you didn't argue with them, but really in your mind, you're already whatever, like 100% over what the actual cost to do the job is. And so you make out like a bandit. This is just a negotiation tactic, right? It's the same with taxes. It's like, well, if you mess up your report and overpay, we're not going to get you in trouble, but we're not going to give you the money back necessarily. You'll have to go through all the filings and make amendments and addendums and all of that to get your money back. But it's just a trickster game that's played by, everyone, right? This is well known. And that's what's going on here. It's going to be kind of odd. It's almost as if what's happening is the SEC's trying to get Coinbase to get themselves in trouble. It's like if you don't know what your kid's doing wrong and you're like, what did you do? And you try, what? It's pretty dumb. It's like, hey kid, what did you do? What did you do wrong? And they're like, I did this wrong. And then you get them in trouble for it, but you don't really know what you got them in trouble for. It's what it feels like. It's a little bit of a joke. Let's though get into mining news, which is definitely more fun right now. Bitcoin mining industry is well positioned to participate in a new cycle. The next main catalyst for the sector is the reward halving during early 2024, the report said. Now, I did want to look that up. Bitcoin halving countdown. Here we go. We'll use the nice hash one. Hopefully it's accurate. We are less than a year out now, boys, from Bitcoin halving. March of 2024. March 13th is what it's calculated at, and we just hit an all-time high on the Bitcoin hash rate, by the way, too, I believe. We had hit over 400 earlier, showing 379 exahash a second. Big jump in difficulty, too. So this is going to be an absolutely wild halving for Bitcoin. The mining industry is well positioned to participate in a new Bitcoin cycle, Bernstein said in a research report Thursday. The broker sees positive catalysts from the largest cryptocurrency's safe haven status, the reward having due early 2024 and low energy and equipment costs. Rising Bitcoin prices, the largest cryptocurrency by market cap, has climbed 70% this year. And easing energy and equipment costs bode well for cash generation in the leverage position of miners, the report said. This should help improve gross margins in 2023. If the Bitcoin price continues to rally, Bernstein expects miners' production in March and April to exceed their Bitcoin liquidations, leading to a net increase in holdings of the cryptocurrency. This could help the company's debt repayment positions because Bitcoin held as treasury assets can be liquidated at better prices to meet debt obligations. In the medium to long term, the next main catalyst for miners is the halving, the note said. Roughly every 4 years, the total number of Bitcoin that miners can potentially earn is cut by 50%. Halvings make Bitcoin more scarce by reducing supply, thus leading to prices rising. And this results in more miners joining the network, which increases the hash rate and the network security. If the 2024 halving follows the same pattern as earlier ones, the Bitcoin mining industry would see lower competitive intensity due to the sector's wipeout in the bear market of 2022. And higher Bitcoin prices, which would deliver improved profitability before additional mining capacity comes online, the report added. Now, I'll tell you this, there is no shortage of people investing in Bitcoin mining right now. And it's to the point to where if you do have the expertise to go help people out, start making cold calls, start calling people if you don't have the funds yourself, and start trying to like go to meetups and so on, because this is really the time where you're going to be able to have a better chance at participating within Bitcoin mining, which I think is going to be the biggest one that you can get into. And I say that because there's less people interested because the price is lower. And so that gives you a strategical advantage over everybody else right now. And I think that's really important. Now on sonofitech.com, I am selling the e-course. There is an upsell to that e-course. It actually has full charts and analytics from not just the price of Bitcoin, but the price of hardware and the timing of that over the past 2 cycles. So if you're interested, definitely check that out. I thought it was pretty good information over there. But suffice to say, the halving's coming. I think it's going to be wild because we've seen Bitcoin react completely different than was initially anticipated. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofitech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.